Great. Good morning, everybody. Thank you so much for joining us. My name is Renee Contemelio, and I'm here with Ann Lavelle, and we're going to give you some tips to previewing your ACA forms. This year went really, really fast. I can't believe it's ACA time all over again. Just a little housekeeping at the beginning. All participants have been muted for this webinar. So we'll review where you can direct your questions at the end of this webinar, and we'll also send all of you this presentation. Just a reminder, we have a lot of other year-end webinars, and you can register for those. You'll find those on your iSolve client landing page. And then we also have our year-end resources for you that you can also find on our website. So we will just kick off with the most fun slide, the legislative and court update on ACA.
Hello, good morning. This is Ann Lavelle. Most of you tune in for the monthly compliance webinars, and today we're just adding a little bit of compliance to this webinar. And there's always something new with the ACA, right? The government can't just leave it alone. So the most interesting thing that happened this past year, and that will impact you sort of indirectly, is the fact that we have a little over 16 million folks in the marketplace, the federal or state marketplaces. That is a 50% increase since President Biden took office. And we can debate why that has occurred, but the end result is that this increase in folks happened even though the silver tier plans, which are sort of the mid-level plans in the marketplace, increased in price about 3.4%. The reason employers should care about this is the more people that are in the marketplace, that means that more of your employees are in the marketplace, and that means the chances of triggering a penalty, whether we're looking at the A penalty or the B penalty, has increased by about 50% because we have so many more people in the marketplace. And one of the reasons people think they've gone to the marketplace is because employers are having trouble because of the cost of health insurance of offering an affordable plan. And some employers have simply said, I'd rather pay the penalty than offer health insurance coverage because it's cheaper to pay the penalty. That's certainly a business decision you can make. But if you haven't made that decision and you inadvertently have a plan that's not affordable or doesn't meet minimum essential coverage or minimum value, you can trigger a penalty unknowingly if one of your employees has gone to the marketplace and received a tax credit or subsidy for insurance coverage there. The other reason we may have an increase in the marketplace is that what was known as the family glitch has been fixed. That's a really technical term put out by the government, the glitch, but that's what we have. And what the glitch was is that affordability under the ACA was based only on the cost of coverage for employee-only coverage, not family coverage. And so what ended up happening sometimes is the cost of the coverage was affordable for the employee, but maybe they had to pay 100% of the coverage for their spouse or dependents or whatever. And that was a cost they could not afford. But because the coverage was affordable for the employee only, their family could not get any tax credits or subsidies in the marketplace. And that caused a lot of hardship for about 5 million individuals who were caught in this glitch where the employer-sponsored coverage was affordable for the employee as defined by the ACA, but not for the family. So the IRS fixed this glitch so that if a family has to pay more than a little over 9% of their household income for coverage under the employer plan, then they can actually get tax credits and subsidies for the family members in the marketplace, even if the employee-only coverage is still affordable. Now, don't worry, you don't have to change how you calculate affordability as an employer. It's still just based on the employee-only coverage metric, but you should know, and this may be helpful to some of your employees, that if, for instance, the cost of family coverage for your plan is 100% for them, they actually might be better off to have their dependents or spouse covered by the marketplace because they can get tax credits and you will not get penalized as long as the employee-only coverage is still affordable. So that can be a good option for some of your employees. The other thing to note is as we go into 2024, the marketplace premiums are expected to increase on average by about 6%. That's still better than what a lot of employers pay and the increases they see, but that is out there. Also, we mentioned this last year, but it's worth repeating because the IRS mentions it all the time, is they view this as there's no statute of limitations for any penalties. So they can reach back as far as they want to reach back. So maybe they didn't discover that you had not had an affordable plan 2 years ago or 3 years ago or whatever. And there's no statute of limitations. It's not like you're in the clear after so many years. If you've had a problem with your plan, they can implement the penalties at any time. And as always, they have repeated that failure to pay penalties can result in liens and seizures of real property, vehicles, bank accounts, etc., which can be a problem, obviously. Also, as with every year, they have increased both the A and the B penalty. So the A penalty, both of these have gone up roughly $200 to $300 per employee for the year. So the A penalty now sits at roughly $2,880, and the B penalty, the sledgehammer penalty, is roughly at $4,320. These are calculated monthly. So if you're going into 2024 and you realize you have a problem going on and you want to fix it, you can sort of stop the bleeding and limit the damage or limit the amount of penalties you might pay. Because if you fix it by, let's say, March, you only have 2 months worth of penalties. So always keep in mind that the penalties are on a monthly basis. And if you need to fix anything, you can do that and avoid penalties for the rest of the year. So that is the fun legislative court update. For those of you that tune into the compliance webinars next month, I'll just put a little plug in. We're going to do leaves of absences from beginning to end, whether you're an FMLA employer or not. We're going to talk about how they start, how you document it, when you can end it, if ever. That seems to sometimes be a problem, and how you handle PTO and all that good stuff with the leaves of absence. So thanks very much, Renee.
Excellent. Thank you so much. All right, so now we know how important it is to file ACA and be ACA compliant. We have our deadlines. So the IRS deadlines this year, they need to be, your participant statements need to be postmarked to your employees no later than March 4th. The deadline for the employer statements, the paper filing, which typically we at CTR would not file paper for you, but that deadline is February 28th. And then April 1st is the deadline for your electronic filing. Our internal CTR deadlines, previewing your ACA forms, I would say just start previewing your forms right now. There's no reason to wait. If you see something that might need addressed, something you might need to fix in employment category, you can do that now. But you don't want to approve your ACA forms until after you process your last payroll of the year. We're asking that you approve your forms in iSolved by January 9th. That's the point where we at CTR will print your forms, we will pack them, we'll mail them out to your employees, we'll file them electronically with the IRS. We'll make sure they get accepted, and then we'll reach out to you if there's anything that needs corrected well before that April 1st electronic filing deadline. And you can also see we put a link in here to the IRS instructions and deadlines for your reference as well. So to get started, how do you preview your forms? You're going to your client management ACA forms approval screen. Make sure that you're choosing 2023 from your drop-down menu. It should be populated by default. If you have multiple FEINs, you do need to separately preview each form for each company. Okay. Now, the run alerts option is this condensed version of your forms. You would click run alerts if you have a fully insured plan. This will give you the abbreviated version of your ACA forms. It'll show you names, socials, addresses, hire date, term date, and of course the codes. It's what you need to review to verify the information is correct. If you're self-insured, you want to click preview forms. It's the same information as run alerts, but it's the full version of your employee's ACA form. So in other words, it's going to list their dependents, because if you're self-insured, you have to list dependents. So click preview forms, look at them that way if you are self-funded. So the run alerts report is going to highlight for you any potential or critical errors. So a potential error is going to be highlighted in yellow. This means, hey, take a look at this. It's probably not right. Check it. Something highlighted in red, however, is an error that's so bad the IRS won't even accept your forms. Okay. So if you see something in red, absolutely must be fixed before you preview your forms. You see something in yellow, double check, make sure it's correct. When you're reviewing your 1094C forms, this information is going to populate from what you have in iSolved already. Okay, so part one is going to be all the legal information from iSolved for your company. It's going to list the name of your company, your FEIN. You want to double check all of this information, make sure that it's correct. You also want to make sure that on line 21, if you have more than one FEIN, that box is checked, because you're telling the IRS, yeah, it's not just this form, but there are other forms that go along with your aggregate group. Line 22 is going to populate based on the information that's already checked under your ACA report options page in iSolved. So if you use your search the menu bar, type in ACA report options, good idea to double check those certifications of eligibility. Okay, and we'll talk about those here. So there's a couple different certifications. If you don't know if you qualify for one of these certifications, ask your broker. Your broker will be able to tell you if you qualify for either the code A, qualifying offer, or the code D, the 98 offer. Okay, the 98% offer. Those boxes should be checked off if you do qualify. So in order to check the box for code A, qualifying offer, you would have had to make a qualifying offer to one or more of your full-time employees for all months during the year during which that employee was full-time. That plan must also be offered to their spouse and dependents. A code D, 98% offer, is the employer must offer a qualifying health plan to 98% of full-time employees and their dependents, and that full-time employees offer of self-only coverage is affordable. And then if you as the company check that box, then you're not going to see any values under your full-time employee count in part 3. So don't be alarmed if that part is blank. Okay, again, if you don't know if you qualify, check with your broker. If you do need to make any adjustments here, like I said, you're going to go to your ACA report options, and I've highlighted here for you where you would check one or the other or both of your certifications. If you have more than one FEIN that's part of your aggregate, make sure that all the companies are listed under Part 4. If you're missing a company, go to your ACA reporting groups page and you can drag over your other companies, okay? Right where it says selected legal companies, you want to make sure all your legal companies that fall under your aggregate are listed under selected legal companies. This is the screen that will populate your ACA form under Part 4. If you need to manually edit something, it's not very common, but you can, okay? If you go to your employer overrides, you can use the drop-down menus. Maybe you need to change something, your full-time employee count you think might have been off. Any sort of reason that you would need to override that, you can do that here. Again, it's not very common because the data is again pulled directly from your data in iSolved. Okay. When you review your ACA forms, you want to make sure, first of all, that you have a form for every employee who was full-time at any point in 2023. Now, for those people who are self-insured, your part-time employees who were enrolled in coverage are also going to get a 1095. So basically, we have 3 lines for each employee, line 14, 15, and 16. Line 14 is what you as the company did. Did you offer them coverage or did you not offer them coverage? Line 15, if you have a code 1E, you're going to see a monetary value here. That value is the lowest cost employee only option offered just to the employee. It doesn't matter what plan the employee actually chose. They could have paid for employee plus spouse, family, a different plan that they paid more for. It doesn't matter what the employee actually chose. The value that populates here is going to show the lowest cost that was available to them. Okay, not what they actually had deducted from their paycheck. Then line 16 is what the employee did. Did the employee accept the coverage or did they waive the coverage? Okay. Line 16 would also tell us if you, as the company, did not offer this person coverage, why? Is it because the person didn't work for you? They were in a probation period? They weren't full-time? These are the codes that would populate. So line 14 is the employees or the employer's action. Did you offer or not offer? Line 16 is the response. Did the employee accept the coverage, waive the coverage, or they just simply weren't eligible? All right, line 14, some very common codes. These are all in your year-end guide too, so you can reference these. But a code 1A, very common. It means that you offered a really inexpensive plan to your employees, and it was so inexpensive that it was under the federal poverty line. A 1E is also very, very common. So 1E says you offered the employee, dependents, spouse, they were all offered coverage, but it was above that federal poverty line. So when you have a code 1E, you're always going to have a monetary value. You need to tell the government, I offered them coverage and this is how much it would cost for the lowest employee only option. Okay. 1G, I mean, you have some other ones here. The 1G is the employee wasn't full-time, but they were enrolled in self-insured employer-sponsored coverage. The 1H, very common, that's no offer of coverage. Anytime you have a 1H, you need to have a reason why. So you need to explain, why didn't I offer this employee health insurance? Most often, they didn't work for you, they were part-time, or they were in a waiting period. You might see some other codes, 1Js, 1Ks. Again, these are all listed for you in your year-end guide as well. But your most common, you're going to see 1A, 1E, and 1H. Conditional offers. So some of you might offer health insurance plans that have a conditional offer for spouses. If that's the case, let us know so that we can confirm that your plan has that denoted properly and the correct codes will populate on your ACA forms. A lot of you, are familiar with your client level benefit plan setup as well. If you feel comfortable, you can check that box off if you know it's a conditional offer for spouse, or just let us know and we'll take care of that for you. So some common line 16 codes. So this is the response. What's going on with the employee in this line? So a code 2A is going to tell you the employee wasn't employed during any day of that month. A 2B is going to let the IRS know that employee was not full-time or they terminated during that month. When someone terminates, you're going to see a 1H that they terminated, and a 2B, that's the month they terminated. A 2C, very common, that's telling them, hey, the employee actually enrolled in coverage. A 2D is going to denote the employees in a probation period or in their initial measurement period. So the 2D should be used instead of a code 2B if the employee is not full-time, okay? A 2F and a 2H, those are both your safe harbor codes. So you're only going to have a safe harbor code 2F or 2H if you have a code 1E. And I know I'm throwing a lot of codes out there, but trust me, they are all listed in that guide for reference. You don't need to memorize these. Another thing I just want to point out, when you review your ACA forms, I personally find it easier to review a code at a time. So do a control F, search for all of your 1Hs. So when you're going through, let the PDF highlight that code 1H. You go through and you could stay focused. 1H, I didn't offer them coverage. Why didn't I offer them coverage? Well, it's because 2A, they didn't work for me, or 2B, they were part-time. So I do find that that's easier. All right, so here's an example and a look back or an initial measurement period. So we have Acme here. They use a 12-month initial measurement period for all their variable hour employees. This employee was still in his initial measurement period for the first 6 months of the year, and then he qualified as ACA full-time and was offered coverage in June. The employee waived, but the coverage that was offered was affordable under the rate of pay safe harbor. So what we see here is January through May here, he does not get an offer of coverage. Why? We can see in line 16, the reason why is he was still in his measurement period. In June, we see a 1E. We offer him coverage. It would have cost him, for the lowest cost employee only option, $200 a month. The employee waives that coverage, but our code 2H says he didn't waive because it was too expensive according to the affordability guidelines. And that coverage was affordable to him under his rate of pay. Okay. All right, another example here. Same company, Acme, 12-month ongoing measurement period for all of our variable hour folks. The plan year starts July each year. For the prior plan year, the employee was full-time, ACA full-time, and was offered health insurance coverage. But for the next plan year, starting at that July renewal, the employee didn't qualify as full-time. So this example would be January through June, we have a 1E. We offer that employee coverage because he was ACA full-time. Coverage would have cost him, the lowest cost option available to him, employee only, was $200 a month. He waived that coverage, but it was affordable to him. So he has a 2H indicating he waived the coverage, but it was affordable under the safe harbor code. In July, though, he's still working for us, but we don't offer him coverage. Why don't we offer him coverage? 2B, he was part-time, not eligible. So in order for iSolve to populate these codes for you correctly, we need to make sure that you have ACA measurement policies in iSolve. every one of you, if you're using CTR for your ACA reporting, if you're using the iSolve platform, you will have measurement policies in iSolve. Always a good idea to take a look. Make sure though, double check. We check them, but we also would like for you to check them as well. These measurement policies are very important because if you don't have them, iSolve doesn't know how to measure. It won't automatically populate those waiting periods. It won't tell you automatically who was full-time and switched to part-time or vice versa. Okay. If you don't have measurement policies, then you also need to manually override the forms, and nobody wants to do manual overrides. So just take a look, make sure that your measurement policies are in place and they're up to date, they're current. Again, we do check these for you, but it's a good idea for you to also peek in on those once a year. If you need to manually edit an ACA form just for one employee, you can go to the employee's ACA report override screen. Make sure the reporting year is correct, 2023. And then let's say you need to pick a different code. So you preview your forms, you're showing a code 2D, but in real life, it should be a code 2B. You can override that. You only need to change the month that you need to override though. You don't have to add the codes into every single month. If the rest are correct, just leave them alone. An example when you would need to do this is if you have a union plan. So iSolved won't automatically populate the code for a jointly sponsored union plan. If you do, then you would go in here and you would add the appropriate codes. Okay. Now, if you offer the really inexpensive plan, so the inexpensive plan means that it was below the federal poverty limit, you're going to see a code 1A. You offer them coverage for the entire month. You will qualify for 1A only if the employee contribution for that self-only coverage is equal to or less than the IRS rules. And the IRS looks at a percentage of an employee's household income. So iSolved will use the level in effect 6 months prior to the start of your plan year. That's how the IRS rules work. And I want to point out that to qualify for a code 1A, that federal poverty line safe harbor, the highest premium for an employer's lowest cost self-only coverage would be $103.28 a month. So if your employees are paying $103.28 a month or less for their health insurance, you'll have a 1A. If they're paying a penny more, you're going to have a 1E, and you will see monetary values in line 15. Okay, a 1A, line 15 is going to be blank. It's so inexpensive, the IRS doesn't even need to know how much the employee share was. If you have a 1A and the employee waives coverage, line 16 is going to be blank. If they accept coverage, they'll populate a 2C that they enrolled in that coverage. Okay. The code 1E means that you offer coverage to the employee and their dependents. It may or may not be affordable. So you will have, if an employee waives, you're going to have a safe harbor code. So if you have a 1E or any other offer of coverage other than a 1A, in line 14, you are going to have your offer of coverage. Line 15, you're going to report the monetary value. And you want to make sure there's always something listed in line 16. Blanks are not good when you have a code 1E. That means that iSolved could not verify either one, the employee enrolled, or two, that the coverage was affordable. Okay. So here's an example in this first screen here of what you don't want to see. You don't want to see a 1E and a bunch of blanks from August through December, because that's saying you offered the employee coverage. It would have cost $140.62 for the lowest option. And based on this employee's wages, there's no safe harbor code. So if the employee waived coverage and the offer was affordable, you're going to see either a 2F or a 2H. A 2F means coverage was affordable based on their rate of pay, and the 2H is based on their W-2. Okay, you always want to see that 2F or 2H. So common issues, 1H is no offer of coverage. Anytime you have a 1H, you want to make sure there's a code in line 16. You need to tell the IRS why you didn't offer them coverage. If you don't have a code in line 16, that does leave the company exposed to a potential penalty. Common codes you would find in response to not offering somebody coverage would be a 2A, they didn't work for you, a 2B, they weren't full-time, or a 2D, the employee was still in a waiting period. Again, this should all pull from your employee's history in iSolved. If you need to override something, you can, or just resolve it by correcting the employee's employment history in iSolved so your forms will populate correctly. Another common issue is missing employment categories. So in this example here, the employee had blanks January through March because he didn't have an employment category assigned for those months. Make sure that all your employees are assigned their employment category with an effective date equal to their hire date. So when you're changing somebody from variable to full-time at your company, you never want to override their variable history. You don't want to override any history. You always want to add new. So you have a complete history of how this employee worked when they changed employment categories, but you don't want to override that and delete that history, or else you're going to run into problems with your ACA forms, because iSolved has no idea if that person was part-time or full-time. Another really common issue is marking employees as inactive. So you should always just terminate somebody in iSolved if they're terminated. iSolved has no idea what to do with people who are marked as inactive. It doesn't know if they're on leave, if they're eligible for coverage, if they're not eligible for coverage. iSolved by default, though, the software is going to assume they were eligible and that they were offered coverage during the months they were inactive. So if that happens, you're going to run into affordability issues. If they're not working for you, they're not making any money. So there's no income to reference to make sure it was affordable.
And Renee, can I just
Yep.
hop in for
Yep.
1 second? The advice to not leave people as inactive is so good from not just an ACA perspective, but from a whole bunch of other employment law perspectives, so that it's crystal clear whether we have somebody on leave or terminated or whatever it might be. When we allow somebody to just hang out there as inactive, that can cause you problems outside of the ACA as well.
Mhm.
Okay, thanks for letting me jump in.
Yeah, absolutely. So yeah, you definitely want to make sure you terminate somebody in iSolved on their general screen if you want the forms to record that code 2A, not employed for the month. COBRA. So you generally do not have to report COBRA offers if your plans are fully insured. The exception is you need to report employees who have a reduction of hours and are offered COBRA. So to report COBRA offers for a reduction of hours, you do need to make adjustments on the employee's ACA forms. This is where that employee override screen is going to come into play. When you have somebody, if you're fully insured, employee has a reduction of hours, you want to go to this ACA reports override screen, click add new, make sure you have 2023. And then only for the months the employee was offered or enrolled in COBRA due to a reduction in hours, you want to select the appropriate codes, a 1A, 1E, or 1B if you offered, a 2C if they enrolled, and a 2B if they were part-time and waived. So again, you only need to override the codes you're changing, and then you save at the top. Again, this is for fully insured employers who have an employee offered COBRA due to a reduction in hours. If you're fully insured and the employee terminates and gets offered COBRA, you do not have to report that for ACA. All right, so IRS example 1, the employees offered COBRA after a reduction in hours in November and the employee enrolled. You would enter a code 1E for family COBRA coverage offer, or you would enter a 1B if the COBRA was offered only for the employee, like in this example, and you would have a 2C to denote they enrolled. Okay. IRS example 2, the employee is offered COBRA after a reduction in hours and did not enroll. So you would enter your code 1E for the COBRA offer to the entire family, like in this example, or you could also have a code 1B if the COBRA was only offered to the employee only. Then you have your code 2B denoting that they were part-time and did not enroll. For self-insured plans in part 2, same procedure for the reduction in hours. You do have to, in part 3 of the form, which is only for self-insured plans, you do need to check the coverage override boxes for all months the employee and dependents were covered by the self-insured health plan, including through COBRA. Okay. For terminated employees, for the months the employee was terminated, even if the employee enrolled in COBRA, you're going to have a 1H and a 2A. These will automatically populate through iSolved. Be sure that you check the coverage override boxes for all months the employee and the dependents were covered by the self-insured plan, including through COBRA. For self-insured plans, keeping on that topic, COBRA coverage for terminated employees and reduction of hours, you have to report both. If you're self-insured, you have to report both. The employer must use the ACA override screen to add that coverage in part 3 for the months the employee and the dependents were covered by COBRA. So to do that, you're going to go to your coverage override section, check the boxes for all months the employee or their dependents were covered by your self-insured plan, including through COBRA. Here's an example, Jacob Abel, he's terminated in September. He enrolled in COBRA through the end of the year. So we'll see below here, he's 1H starting in September. He's not employed, but a 2A, he enrolled in the COBRA coverage. Then you're going to check the boxes below for all the months Jacob was enrolled in coverage, whether as an employee or on COBRA. This is again just for your self-insured companies. If you do need further guidance on how to report COBRA, I put a link in here to the IRS website. And it's going to give you more scenarios. It's going to give you examples on proper reporting of COBRA coverage. Right. So please just approve your forms prior to the January 9th, 2024 deadline. We want to make sure that you are compliant and that all issues are addressed well before the IRS deadline. You're going to approve your forms on the ACA forms approval screen, same screen that you looked at to either preview forms or run your alerts. Remember, review your forms now. It's already October. You want to avoid any sort of errors later. And refer to our year-end guides, which lists all those codes that we went through. Employees who opted out of receiving a paper W-2 this year via the iSolved electronic consent, they will also receive the electronic ACA form in their employee portal. And then, as always, if you have questions, you can email aca@ctrhcm.com.
So one person did ask a question here, and just to clarify, yes, everyone will, these will be posted on the website. Anybody who's attended will get a copy. So this information will be readily available to anybody who's looking for these slides, or the recorded version of this webinar will also be available. So good question. Thank you.
Thank you.
Okay. All right. Thanks, everyone. Take care. Have a wonderful afternoon.